AP, London. Many movie theaters around the world are deteriorating. As it struggles with billions of dollars in debt and more vacant seats in front of its screens than anticipated, Cineworld Group PLC, one of the biggest theater operators in the business, acknowledged on Monday that it is thinking about applying for Chapter 11 bankruptcy protection in the US. The British company, which has cinemas in 10 nations and owns Regal Cinemas in the US, declared that its theaters are still open for business as normal while it looks for ways to reduce its debt. Although investors in Cineworld stock could suffer significant or complete losses on their holdings, the company indicated it aims to continue operating despite any prospective filing. Certain blockbusters such as Spider-Man, No Way Home, Top Gun, Maverick, and Jurassic Park: Dominion have drawn audiences back into theaters this year. Industry juggernaut Warner Discovery has announced that it will focus more on theaters and stop releasing new movies on its HBO Max streaming service. However, as of Sunday, the $3.3 billion in ticket sales this summer were still running nearly 20% behind the summer of 2019 before the pandemic. Furthermore, it doesn't appear like any significant hits are imminent to significantly improve those numbers. As it considers its financial options, Cineworld said it is in discussions with lenders and other significant stakeholders. Additionally, it stated that it anticipated ultimately continuing its business over the longer term with no significant impact upon its personnel. Approximately 28,000 people work there, according to the business website. Even if workers could survive unharmed, shareholders might not. The business reiterated its Monday warning that a deal to reduce the debt on its balance sheet would harm stockholders. The value of the company's stock in London fell by 21.4% to about 3.8 US cents. After the Wall Street Journal reported that the company was preparing to file for bankruptcy protection within weeks, the stock fell 58.3% on Friday. Its management stated earlier in August that a decline in new releases will make the following 2 months difficult. However, they also expressed optimism for a successful year's end. Rival AMC Entertainment has similarly criticized the approaching film calendar as being underwhelming, but is upbeat about the year's conclusion and the year 2023. There have been nearly a third fewer broad releases this year than there were prior to the outbreak. A portion of that is due to ongoing holdups in Hollywood's production pipeline brought on by earlier COVID-19 closures and delays. However, it's also because a lot of movies are streamed directly. One of the summer's most watched movies, the Ryan Gosling-Chris Evans action thriller The Gray Man, played on Netflix. AMC's stock dropped from $18.02 on Friday to $10.46 today, despite other variables having an impact on the shares. The new preferred stock units of the corporation, which carry the ticker code APE, were on the market for the first time on Monday. For each AMC share an investor possessed as of Friday's close, they were given 1 share of APE. Analysts compared it to a 2-for-1 stock split, which frequently results in a company's share price dropping by about half. According to analysts, the new APE shares give AMC a potential source of funding that it might use to pay down debt.